Anurag Kataria. He's Vice President and Business Head with ITI Investor Services, and he joins us in Mumbai studios. Anurag, hi, welcome to the show. The run-up in the gold prices, was that expected, or are you surprised? Are you looking at 1,800, 2,000? How are you working?
I think compared to 2008, what we are seeing as far as gold prices are concerned, there are lot of known factors, and that's the run-up we have seen on the gold front. And I believe these prices should see cracks coming in, because within 2 to 3 trading sessions we have seen a rise of around $100. That is pretty unusual for gold. This run-up can continue, but we can see some kind of top forming in place around $1,780. So $1,780 and above, if the closure is there, then only we are looking at a target of 1,860, 1,870. But otherwise, we feel that from $1,750 level, we are looking at a range of 1,718. That should be the range wherein most of the profit booking should take place for the positions which have been initiated around $1,600.
We have come all the way from 1478 to 1771 in the markets today. Do you see a midpoint happening around, or do you think 1700 would hold for a considerable time?
No. What you have said is absolutely right, because the kind of $300 run-up we have seen in the markets, there has to be a midpoint, but it will be very difficult at this point of time to find that midpoint till the time we see some kind of top forming in. Because of the gap opening and access market volatility, we feel one will have to wait and really be cautious on the market as far as long position initiation is concerned. People who are long can definitely look for a level of 1780 to be booking profits.
How about the silver prices? Because of course we understand that it's a dual commodity, tends to follow base metals on the lower side as well. How would you want to trade that?
As far as silver is concerned, we feel that let us keep it aside, because that run up has already happened prematurely, and then the kind of cracks we have seen, definitely silver prices from 75,000 have come down to 50,000, and I think 50,000 should be a bottom. Any price around 52, 55 would be a good bet as far as long-term long position is concerned. But overall industrial metal pack, I still believe there could be a value buying coming in, especially in copper, because of the fundamental reasons. If you see LME inventory, which is at around 4-month low, it's in 13th session today consecutively, wherein we have seen negative inventory coming in from LME. So that would be one of the cases which can be seen as far as industrial metals and silver is concerned.
You made a point on copper. Of course, we saw it at 8-month lows yesterday, and those kind of levels have seen some profit, opportunity buying on the lower side in Asia and Europe, both sides today.
Absolutely.
So what kind of levels are you looking for in the Indian markets now?
Indian markets, we should be comfortable around 404, 406. That's a resistance level. If that comes in, there could be a sort of a profit booking or sort of a top forming in. As far as current market prices are concerned, 399, 398 should be a good level to buy, with a stop loss of 395 to 396.
How about the crude prices? Because we've seen quite a bit of a decline in them as well. Last 2 days saw 10% of a cut coming. In the month of August, we've seen 17% cut off from crude prices. What kind of levels are you working with?
If you remember, when we did this show when the crude prices were around $96, $97, we always said that we are comfortable going short for a target of around $75, $76. But now looking at the current scenario, I think there could be a technical pullback to the level of $82 to $83, and that's about it. And that's the call we have taken today. But overall, structurally, there is no change as far as bearish momentum of crude is concerned.